Welcome back to the SteadyTrade Podcast, everyone. I am Tim Bohen, back with Matt McCall. Well, listen, it's kind of Matt and I work together through the week, just kicking back ideas on topics, what to talk about. We read all of your comments. Remember, drop us comments. But today, our topic was kind of forced upon us. It was. We actually had an agenda that we put to the next episode because it is a very second or probably third. Very, very ugly day out there right now. It was already bad on Friday. Friday would have been August 2nd. And then, go into the weekend, Iran, Israel starts going off. A lot of stuff going on in the UK. Like there's all this bad news flow over the weekend. And then you come into last night. And like one thing I do, and I don't know if you do the same, Matt, is I'm on Twitter, X, way too much. So one thing I try and do on the weekend is I detach. And like this weekend, I was really busy, didn't really check Twitter, X at all. And then I just kind of was having dinner Sunday night and I opened it up and I'm just like, Jesus, like the world ending here? Like what is going on? And fortunately, with bankage or the Japan, the Nikkei limit now, like all this stuff. Fortunately, at the time we're recording, it seems to have calmed down a little bit. But like last night, it was just like, again, you got World War III and, Japan's crashing, Bitcoin's crashing. It's like, whoa, what's going on here? So anyway, that's what we're here to talk about is like, how to react to this, how to manage it. And one thing funny, and then I'll let Matt in, is like this kind of stuff excites me. Now I know, remember the producers of the podcast brought us together because we have a very similar interests, but very different styles. Like, I'm almost exclusively a day trader. And when I do long-term hold, it's more like weeks, like tops. Matt's a little, longer term, bigger picture type stuff. So for me in day trading land, I get giddy during times like this because what happens is, I've been doing this for 18 years. Like what happens when everybody in quote unquote real stock starts freaking out, we get all these crazy penny stock runners that just go absolutely bananas. Now, I don't know if that's people in, real stocks moving into penny stocks but it's always happened. So I was actually on a webinar Friday and I was just like giddy and people are like, why are you so excited when the market's crashing? I'm like, because I know what happens when this happens. So I'll let you in after that long introduction. But are you excited by this? I guess that's my first question. Are you fearful or greedy in the words of old Uncle Warren?
If I had to choose one or two, Tim, I'd say greedy right now. That being said, I'm not jumping in, with 2 feet right now. I'm wading in, if you will. We're filming this Monday, a little after 1 o'clock. Okay, just so people know our perspective, what we're talking about now, because a lot can change in the next 48 hours when this podcast comes out. And, I'm like you though. Last night, I tend to check the markets a lot on the weekends, especially Sunday as the futures open, especially Asian markets, because I have some investments overseas. And that Nikkei last night down, just so everybody's up to date, fell 12.4%, the biggest one-day drop in a Nikkei since 1987.
Which
that's crazy, isn't it?
I'm
that's
sure
crazy
most
to me.
People know, but Black Friday was also 1987. Yeah,
exactly. It's more like, that's when the Dow was down over 20% in one day. Yeah. So that was a crazy time. But anyway, I am going to lean greedy because I always have to have numbers that back up whatever my view is, because we all have views. And I unfortunately put on CBC this morning. I had to listen to Jim Cramer for 90 seconds before I turned it off. I think what happens in times like this, people tend to get involved in this correction and think about it, and they think about today, not long-term perspective, right? So we had the S&P down early this morning, 9.8% from its high. A correction's 10%, 10 to 20, then bear market's 20 below. So it didn't even hit correction mode. Second 5% pullback of the year, very normal. Usually, history shows about 3 of those 5% pullbacks a year. Usually, going back to 1929, Bank of America put out this weekend, even before this nonsense happened today, that going back to 1929, it's called a century. On average, there's one correction year in the S&P 500. So this is normal. But I will tell you, every time it happens, Tim, and I'm glad I'm not managing money right now because I'd be on the phone all day with clients, but every time you get a correction, People freak the hell out. They think the world is ending. The overreaction is
and that was Twitter last night, man. Mind blowing. And not even like, I'm just talking like, most of my accounts are like finance, but like everyone's like, it's all over tomorrow. And I'm like, geez, I'm like, would you guys relax?
It's but the thing is, if you have to take a step back, like, especially like, if you're investing your own money, or if you're listening and you're an advisor like I was back in Vegas to talk to people, you have to look at history and numbers. And history shows in times like this, not day one, you're not buying today, but there will likely be some great buying opportunities. And even this morning, you being a day trader, Tim, some of the stocks I follow, not penny stocks in particular, but some big stocks that I follow are up 10 to 50% off the intraday low in one day.
Yep.
So I can imagine there's probably some penny stocks out there rocking and rolling right now.
Yeah. It's interesting to me as someone that really focuses on short-term trading. And the interesting things I want your input on is, again, this panic and this fear and like, it's the end of the world. And I was talking to these people. I'm like, you guys ever realize you can just sell? Like, it's always so weird to me. Now, we're in the business. We've been doing this forever. But it's just interesting to me that, like, if you're up a bunch on Apple and all of a sudden it's down today, do you realize you can just sell and then wait, which I know I have high confidence that Apple will eventually base for a little while and then start lifting higher, and you can just rebuy that stock. Like, you realize that, right? And it's interesting. And I work with new traders, but it was just like, and they're all freaking out. And I'm like, you can just sell and then remove the emotion from the thing, wait for the chart to turn, and you can just rebuy the stock. And do you run into that too? I guess like it just, as a day trader, it's just like, man, I dump stocks every day. Like, what's the big deal?
I agree with what you're saying. And the problem that I have with it is, you tell people that, and the emotions then take over, right?
Sure.
You're normally going to sell on a time when they panic, probably close to the low. And then they're going to be chasing their tail trying to get back into a company like Apple that, has been in an uptrend for many, many years, pullbacks along the way, but an uptrend that they end up buying at a high because they have FOMO, fear of missing out, right? So if you just hold, if you're a long-term investor, you just hold, you're actually going to be net better than trying to time that. I agree with you. If I always said, if you can't sleep at night, if you're worrying about it, you're getting fights with your wife, your husband over stocks, freaking sell them.
See, and that
get out, right?
Maybe I didn't explain that's kind of what I was getting at. Like, okay, to me, if this is ruining your life, like, again, you're like, I like your point, like, you're arguing with your wife over nothing because you're thinking about a stock in the back of your head. Like, as a day trader, I just don't get emotional about this stuff.
Well, you're a pro, and that's why you do what you do. I mean, because you're able to separate your emotions from your trading and your strategy and your plan, right? Where even long-term investors, though, Tim, should have a plan, and you don't go away from that plan because of a couple days, especially long-term trading, right? If you're long-term investing, if your goal is to own Apple stock, let's say, because that's what stock we're talking about, for the next 10 years, who the hell cares what happens from day to day, even quarter to quarter? It's irrelevant. There's 40 quarters in 10 years. If there's one bad quarter, nobody cares. And all you have to do is trust that company will be a larger company in 10 years from now, because it's larger, as a larger market cap, which means the price of your shares went up. That's all you have to think about.
And again, we can move on from this discussion. Maybe I'm dragging out too long, but like, again, my point is, like, if you own that Apple and it goes up like 1 or 2% a day, are you emotional? Like to me, the downside should be traded. It should be a mechanical decision. Like, you shouldn't be like when it's just up every day, you don't even look at it. And now you're watching it 24 hours a day because it's going down. And I think that's why people make these terrible decisions, because you didn't look at it for 3 weeks when it was going up 1% a day. You didn't even care.
No, you're 100% right. I mean, I also think, as much as I love the internet and being connected and have our phones connect everybody and talk to people around the world through FaceTime, it's one of the worst things for the stock market, because it gives you that action to look at it 24/7 for investors. I shouldn't say for stock market, for long-term investors. it has you making poor decisions based off, again. And the thing is, if you ask these people today that are freaking out and selling, Tim, why the market's down, they have no freaking clue. They have no idea. It's very simple. To me, while the market's down, we got to a level that we were overvalued, which happens in every bull market multiple times, and we revert back to the mean, get to a level where we get then undervalued, and stocks go back up. Stocks rarely trade where they should be fairly valued. They just don't trade there. It's up or down, and then the market just moves. But as long as you keep making higher highs and higher lows, which the market's been doing since October, we're fine. Let me ask you real quick before we go into our watch list. Would you, if you had like dry powder right now on the sidelines, would you be buying into, let's say, your retirement account to add more to something here? Do you like when this pulls back long term?
So this is what I do when I do that. Okay. So basically, and it's probably going to mirror a lot like you, like, I don't care about yesterday. I don't care about today. Like, I'm a big technical analysis guy like you. What I am like, I don't try and guess bottoms like that's, or guess tops. Okay. So what I'm going to do with Tesla, with NVIDIA, is I'm just going to wait until they start to base, set a few weeks of some sort of basing action where I can set a stop. And then when they start to grind higher, that's when I'll buy. I'll stop out at the break of that support level, kind of day trading style. But like, I'm not buying anything today. Like, I don't know what the hell is going to happen today. I mean, we could be on this podcast and all of a sudden Dow down 2,000 or something. So I just don't like the random. Now listen, I may cut that trade because it doesn't work, but I just, much like day trading on a 1-day chart, I basically do the same thing on the daily. So like CrowdStrike, listen, obviously we haven't talked much about CrowdStrike. I think we both got trapped during that bug. But like, I keep telling people, I'm like, this is going to be an epic dip buy. So people are, same idea. But I'm like, you have to wait for it to quit going down first, because all you're going to be doing is, adding. Then you'll get stopped because you'll reach peak emotional level. And then most likely that's when it's going to turn. So I'm going to wait for it to stop going down and again, consolidate for a little bit. And then at least then I have an area that I can say that's my risk level and my idea is busted below that. So like today, no way. Like, I want nothing to do with it from a longer term perspective. Now, day trading, different story. But
yep. Yeah. I mean, you look at CrowdStrike down from nearly 400, hit 200 this morning. And you mentioned NVIDIA at the low this morning, it was down 35% from the high, which is clearly bear market territory, and still up over 100% year to date. So I think sometimes we need to just close our eyes and think to ourselves, okay, if I own NVIDIA, it's up over 100% year to date. I would take that 99 out of 100 times. That'd be the greatest thing ever. But all people are looking at now in NVIDIA is that's down 35% from the high. And you need to look at both sides of the coin, I think. So Tim, with the market's pulling back, I think we should, last week it started with a watch list. We each brought 3 stocks to the table. We each only discussed one because the show went a little long. So we're going to discuss the other 4 today. And with the market being down, there's opportunity we just talked about. So why don't we do that? Why don't you go first, share yours? We'll go back and forth. Why don't you share your second stock from the watch list?
Yeah. So AST Space Mobile. And it's kind of funny. I did this research report last week, and keep in mind, you guys can get access to this. We sent it out to a lot of you last week, and it's kind of funny. I just brought up the chart before I go over to the read. This thing is pushing the highs in this, or whoops, let me go back over there. Not pushing the highs, but not a bad chart, really. I mean, basically the 52-week high is $21, $21.28, and this thing is up 5% today at $19.28. Now that 52-week high was basically back Wednesday before everything fell apart. So I love, as much as I liked it a week ago, I actually like it even more now because of the fact that, listen, I expected it to be down in the support level more like 13, 14. So the fact that this thing has put up a heck of a fight through all of the last few days makes me like it even more. What I like about this is, they've got these kind of cool satellites, telecommunications. They got some good partnerships. So I still like the space play, even though it never happened a few years ago. But simply from a chart perspective, kind of going back to I mean, it's right under $20. I mean, to me, if you can get in this around $20 and then risk that kind of breakdown where it did base this week around 17, I think it's got the potential. And again, from a chart perspective, it's been on a heck of a run. I mean, it was down in the twos back in May, had a beautiful grind into July, big parabolic candle right at the end of July. And then, as already mentioned, based and didn't barely pull. I mean, it had a red day on Friday, but barely. So I just love the fact that it looks like this story is playing out. So love ASTS around that 20 level. And again, I still think, Papa Elon will bring space back and make it cool again.
So I agree. It's it. I followed this company when it was a SPAC back in 2020 when everybody was doing SPACs. Ran at $25 like everything did, then down to $2. It's just been coming straight up since then. I didn't realize it's been hanging on so strong. It looks good. And if you look at the numbers from a long-term perspective, man, oh man, I mean, they're really just starting to generate revenue. If you look, I think this year the estimate is for 15.8 million in revenue. No revenue last year, right? And then by next year, 141. By 2026, 2 years away, 811 million in revenue. I mean, if they nail that at a $2.4 billion company, whatever it is, that's pretty impressive. They're still going to be losing money for a couple of years. So interest rates coming down will help again. We talked about small caps and stocks like this that need to borrow money still and losing.
Listen, you building rockets and satellites and stuff ain't cheap. Yeah,
exactly. Yeah, so I think
building like plastic widgets or something. Yeah,
exactly. But this is a nice looking company. I like it. I like the space area too. I think I was with you. I was early. Didn't do well with it, but I still think there's obviously something there. So I agree. I think it's a great idea. So I'll jump in with one very similar size. This is about $2.5 billion market cap. A company called Mirion Technologies. It has a medical segment, industrial segment. The medical is basically MRI, stuff like that, but for more oncology, radiation, that type of stuff. So it does imaging, it does safety precautions for them. And then the area that's really starting to take off is the industrial side. And with more nuclear power plants coming online, really, you're seeing potential of one. I think it's in Michigan. They're talking about a big one coming back. It's a way to play nuclear power renaissance without getting pure uranium players or the utility companies that build it or even infrastructure. This would be part of a basket, but I think it's a really nice play. It's profitable. EBITDA margins are expected to increase next couple of years from 22 to 26%. It's got a record backlog of 800 million. Again, for a company that's only let's pull back a little, $2.4 billion. That's a nice backlog. So I think it's one to keep an eye on. I don't think it's a huge winner in the future, but I think it's one that helps diversify nuclear power basket of stocks.
Cool. Well, let me go over to the last one. Now, keep in mind, I kind of started out, like for me personally, I kind of started out with what I perceived to be kind of like the safest. And then we kind of got into a little bit more of a aggressive. And then the last one, very aggressive, very speculative, but it is what we call a former runner in day trade land, huge mover many times over the last few years. And it's LGVN. And the big reason I like it is just simply because of past movements, big spikes, huge movements. And because of that, like, I just really think that when this, when the story happens, like the key with these stocks is if they drop the press releases at the right time and the right momentum, and especially like LGVN as an example, just as recently as basically July 8th, it went from $1.68 to $6. Now it's back at 266 now. The big thing I want you to watch is for, news. Like this is a lower float, frequently manipulated stock, but if it can get that follow-up press release, get the pump, as we say, I really think this could, really explode, especially if it breaks, above that 3 level. I think it could retest the level from back in early July. Now, remember, watch for the recipe. We want you. Don't just buy this thing for a random reason. Watch your news feed, watch for when it drops. And then the key we look for is what we call float rotation, which is kind of a day trade term, but this stock only has 5 million in the float. And if you go back to when it really ran there back in early July, it traded over 100 million shares that day. Okay. Now that's the full day. But if I recall, like in pre-market, it was trading like 20, 30 million shares and they had a press release. So that's what you want to look for. You want to look right now, today, barely trading any volume. Look for news and what we call float rotation, like crazy volume relative to the float. And again, more of like a day trade speculative idea. The other two, more of a little longer term hold, like, for me, maybe a few weeks type idea.
And it's in an area that obviously there's a lot of focus on right now. They have a treatment that's in phase 2A with the FDA for Alzheimer's, and that's an area that every big stock's looking at right now. So they got some good news in middle of July, which is why it popped. They actually got some good news on July 29th as well, that it met its endpoint, that the study is a phase 2A study for that. So it's an interesting company. Obviously, I agree. The risk is a 10 out of 10 because you look at it, it's tiny company. And if it doesn't come through and get full approval of FDA, it's a zero. I mean, let's be honest, it's going to be out of business.
Yeah, flat out. Yeah, again, if I didn't make that clear, I think I called it a crappy penny stock 6 times, like Matt said. I mean, again, day trade. Now, if they get it, different story. But if they blow it, it's probably a zero. Yeah.
I mean, it's a lottery ticket, right? The lottery ticket's either worth nothing, I rip it up, or it's worth a lot. It's a lottery ticket. Long term. I'm not day trading, long term. The last one I'll throw out at you is a company that's a little over $1 billion market cap. AGX's symbol is called Argan. About a $900 million market cap. So it's a engineering kind of construction firm, which kind of sounds boring. But most of its revenue comes through its power systems division. And that's going to be everything from solar facilities, natural gas plants, energy storage. And you're seeing, obviously, the need for energy in the United States, all around the world, with AI usage going through the roof. So this puts them in a really nice position. And again, small. So it's less than $1 billion market cap. So it can move. But it's making tons of money, Tim. This past fiscal year, 2024, just ended, $2.39 a share. By fiscal 2027, which is middle of 26, $5.75 a share, $5.75 a share. Backlog of $824 million for a $900 million company. I mean, it's like I look at this, I'm like, am I missing something? This was a stock I recommended in my 2024 outlook, and then it was around $40 and hit 80. It's come back, obviously, the last couple of days of the market's around just below 70 right now. But this is a company that it meets the big picture demand because energy use is going up. They're working in areas that we see growth, solar, energy storage, etc. And the fundamentals make sense. It's just a small company that isn't covered by a lot of people, flies under the radar, probably a takeover target at some point. If not, probably a 3X in the next 5 years.
And this is a good example of kind of what we were, in my opinion, of what we were talking about earlier, is like, you look at this thing, and I typically don't look much back further than a year, but I'm looking at the 1 year, 1 day chart. And then you just look at it, and it's just been on a beautiful trend. And then you get 2 hideous days, which is, in my opinion, just doing a quick analysis on the chart, it's just the overall market. Like it basically looks like the chart of the S&P. But to me, this is the opportunity you look for because, you just watched it, much like we talked about with NVIDIA, just watched it go up all year, and it just pulled back massively. And in my opinion, and listen, I'm sure Matt would know if there was news, but I'm guessing that, there was no news that made it pull back. It was just the overall market and people panicking out. And that's a great opportunity. Now, listen, if the CEO died or something, different story, but I'm sure nothing has changed in AGX's story over the last 3 days, No.
And if you look, on Wednesday, it hit an all-time high intraday. It was at an all-time high, and now you're down, like you said, it was trading $63 and change this morning from 80. That's an $18 pullback. That's a big freaking pullback. It's like, but if you, what's crazy, Tim, we'll go back just to kind of go back and come full circle. If you would have told me, let's say even me, I'm not going to point fingers. If you'd have told me, Tim, on Wednesday, I'll sell you this stock for 63 and change. Hell yeah. Here's $63,000. Give me 1,000 shares. Yeah. Now it hit 63 this morning. I didn't buy it because I'm a human being too, right? So
I appreciate the honesty.
Yeah.
And I think I almost said we beat it to death. I think I beat it to death at the beginning. So, but it is just such an interesting psychology because like you said, like at 80, hey, if I could give you like a time machine to buy it at 60, you'd be like, yeah, give me the time machine. And then it's at 60 and 8, and you're like, I want nothing to do with it.
Nothing to do with it. Yep. I'm freaking out just like the rest for putting those clowns in CBC on there, freaking me out, all the red lettering all over. So, but yeah, I just think, my last words are, I don't make light of it because nobody wants to likes to see their portfolio go down. And I know it's real money and it affects lives, and I get that 100%. But I just still think that once you start making emotional decisions or making selling stock, panic selling based off just a headline on CNBC that has nothing to do with AGX or your companies you love, you're probably gonna make a bad decision long term. So just keep that in mind.
Listen, this isn't like the Oprah podcast, but like if you want a little life advice, like in anything in life, if it's an emotional decision, it's probably going to be bad. Okay. Like if you're like buying a car or a watch or something, like if you're overly emotional, you're probably going to end up regretting it or whatever. And it's just like, to me, the stock market is a reflection of life in that manner, that if you're not, now listen, I said this earlier, I don't expect everybody to be a robot, but like one of the things that I teach everybody is like, before you even enter, like, what are you going to do if this goes against you? Where are you going to take profits? Where are you going to enter? And I think if you just spend 5 or 10 minutes to think about that type of stuff, write out a trade plan. Like I heart people to write stuff down. You can at least remove some of that, because it wasn't just this impulsive buy and then like, what do I do now? It's red. What do I do now?
No, that's great advice. I think every time you buy a stock, long-term or short-term, you have to have the plan. Otherwise, you're making the plan when your emotions are going crazy, either good or bad, and again, make a bad decision. So I agree. That's great advice, Tim.
Yeah, and again, my opinion, I'm still just very bullish the stock market. Now, that doesn't mean today might not get worse. That doesn't mean tomorrow might not get worse. But I just think that we could come back, 6 months from now, or maybe even shorter, probably like late November, and we could like rehash this, and we'd be like, yeah, what were all you guys freaking out about back on August 5th? Okay, here we are at highs or creeping through highs, and all of you were, my buddies calling me, like all this stuff, and all you had to do was calm down. So
deep breath, Zen.
All right. Well, thank you, everyone. And again, keep in mind, the links will be below, but we do have a link there to get that full report that I did up on the 3 stocks that we talked about. Hit that up. It's free. I think you just got to drop your email and they shoot you a PDF. It prints out real nicely. I just kind of skim through it. I mean, it's not long. It's only like 5 pages or so, but we just want to kind of throw some stuff back to you guys. Drop that in, get access to it. And as always, thank you, Matt, and we'll see you on the next episode of the Steady Trade Podcast.